Hola desde Barcelona, herzliche Grüße nach Österreich. My name is Andreas Schmidt, I'm the Austrian Trade Commissioner in Barcelona. We're currently counting about 200 Austrian subsidiaries in Spain, half of which are located in Catalonia. The COVID crisis has raised many challenges and opportunities for the Austrian investment in Spain. And today we are happy to provide current and future investors with some guidelines in this respect. I would like to thank the experts at Bovea Montero y Asociados, as well as the Austrian subsidiary of Isavolta, for sharing with us their recommendations and lessons learned after COVID-19. The overall volume of trade and services between Austria and Spain amounted to 6.9 billion euros in 2019, with a slight advantage on the Spanish side. Austrian foreign direct investment in Spain, however, is stronger than the other way around. Of course, the current crisis has resulted in a massive reduction in trade, mainly due to the slump in automotive. Between January and June 2020, Austrian exports to Spain have dropped a dramatic 30%. Catalonia, however, in this respect has done better with minus 17% due to the concentration of subsidiaries in this region. On the other hand, Austrian imports from Spain were down by minus 15%. And have thus suffered less. Which are the lessons learned from COVID-19? Firstly, the sectors have been affected differently by the lockdown. Automotive, tourism has been down. Packaging, pharmaceuticals, and chemicals up. Some companies have even used the opportunity to take over a supplier or competitor. The main lesson, however, has to do with nearshoring and resilient value chains. Resilient value chains resisting situations that we suffered during the crisis. But right after the end of the shutdown, we at the Austrian Trade Commission received numerous requests from Austrian fashion, garment, and textile manufacturers looking for manufacturing capacity or suppliers in Spain. Austrian and many other European manufacturers have learned the lessons from disrupted value chains and have since been looking to nearshore their mostly Asian productions. The COVID crisis has taken us all by surprise, and the damage caused has been humongous. However, digitalization, flexibility of the workplace, and resilient value chains are some of the trends that have received a massive boost and will definitely stay with us in the future. I wish you an interesting webinar and can assure you of the support of the Austrian Trade Commissions in Barcelona and Madrid. I'm now handing over to my colleague, Rafael Mead, who will guide you through this online event. Please, Rafael, go ahead.
Yes, welcome and good morning, everybody. Thank you, Andreas. My name is Rafael Mead. I'm responsible for the legal department at the Austrian Trade Commission in Barcelona, and I will guide you through this webinar. Let me just click the slides for a second. Okay, I think you all have seen the agenda on the website, so I will skip that part. But as you have seen, this webinar was organized in collaboration with Bovea Montero y Asociados, one of the leading accounting firms in Spain with over 100 professionals and one of the largest German-speaking teams in this sector. And I'm very happy to welcome three renowned experts from the company with us, which are Elidio Cesar Ferreira. Elidio is partner at the company with over 25 years of experience. He's responsible for the German desk and has extensive experience in cross-border operations and international business restructurings for Austrian companies. Elidio will give us an overview about current trends and opportunities for international companies, of course, especially in times of COVID. He will be followed by our next speaker, Clara del Valle. She's a labor advisor and is in charge of supporting multinational companies in their social and labor management, such as payroll management or global mobility. Clara will introduce us to recent changes in Spanish labor law. And last but not least, Andreu Bové. He's an international tax manager specialized in advising multinational groups in their tax planning of cross-border investments, M&A operations, and consulting of family offices. Andreu will give us an overview on relevant tax issues. Additionally, to give you a very practical approach, during this session, we count with the special collaboration of Aleix Anglès. He became managing director of Isovolta 5 years ago, and for all of those who don't know the company, the Austrian Isovolta Group is headquartered in Wiener Neudorf and is a leading international manufacturer of electrical insulating materials, technical laminates, and composites. The company has 19 production and sales locations in 12 countries, one of those in the outskirts of Barcelona. As I said, our first speaker will be Elidio Cesar Ferreira. He and Aleix Anglès are switching on their cameras and microphones right now. So Elidio and Aleix, I see you're both connected. So please, Elidio, the word is yours.
Thank you very much, and good morning, everyone. Before starting with our first point, trends and opportunities in COVID times, I would like to thank Andreas Schmidt and Rafael Schmidt for your introduction. It is a pleasure to be with you this morning. And also thank you for giving our firm, Wirtschaftsprüfungs- und Steuerberatungskanzlei, operating in Spain, the opportunity of collaborating with Advantage Austria and our Außenwirtschaft Austria in this webinar. And Rafael, you mentioned also the practical approach that Aleix Anglès, General Manager of Isovolta, will give us. He is joining us in this session and sharing his experiences and giving us a practical point of view in the context of managing a company in COVID times. And of course, I would like to welcome all the attendees, and we hope you enjoy this session today. Coming to the key points of the first of our first point, we will address briefly a macroeconomic outlook. This means a great reset, COVID-driven, from short-term to long-term. We will use to illustrate this macroeconomic outlook the European Central Bank and the OECD publications. This means the COVID impact in GDP figures in the euro area, Spain and Austria, and then on a second stage, how the recovery looks like on the short term and then on the long term. Second point, COVID-19 driven disruptions and subsequent events. And immediately after, the impact of these disruptions in the local market and local players. In this scope, the contribution of Aleix Anglès will be very important. Finally, a brief identification of trends and opportunities in line with what Andreas Schmidt has already mentioned, from opportunities that the market has given us in these times. The graphs are self-explaining, so we will make some brief comments on the same. At an European level, European area, we have experienced an abrupt GDP fall in 2020, and we are experiencing it, the mentioned Great Reset. The rebound is expected to occur in 2021 and 2022, and the recovery is expected to be a V-shaped recovery. If we break down these euro area figures by country, and under two scenarios, a single hit and a double hit virus scenario, we consider that the double hit scenario is more realistic right now than the single hit one. This means we should look at the lower dots of the graph. Two main comments. Spain is clearly the country most affected by COVID disruptions. Austria shows a lower exposure to COVID disruptions. How does the recovery look like? To illustrate this topic, we are using the OECD Composite Leading Indicators. Just to explain, these indicators are composed by 14 macroeconomic indicators, and have proven to be efficient, reliable in what concerns predicting market turns on the short term. This since this indicator is active and is being used since the 70s. So we are looking, these graphs are showing an estimation and an anticipation of recovery trends in the next 2 to 3 months. Being the average level 100, the trends of the 3 graphs indicate that Spain will take longer, this is the estimation, to recover than other countries. Austria downturn was not as sharp as in other countries, or Spain and in Germany, and this recovery is on track. And Germany, to have a comparison, will reach soon pre-COVID levels. Obviously, the COVID impact means that the pace of the recovery is different from country to country. On a long-term basis, a brief comment, the expectations of growth remain stable in the sense that growth will occur in the euro area, in Spain, in Germany, in Austria. Yet we consider, as mentioned in the introduction to this webinar, under a new normal. Coming now to point number 2 of this part of the presentation, COVID market disruptions and consequences. 2 immediate disruptions that were sudden. Drop in economic activity. We have already seen the GDP impact. A note that in countries which depend on travel and tourism, for example, Spain, COVID-19 is having a severe and lasting impact on the overall economy. Then a second disruption, the job and income loss, the deterioration of the labor market conditions. And then the immediate consequences of these disruptions. On one hand, a strict liquidity management that companies have to make, and the uncertainty that is related with the aforementioned factors. Also, on a level of management of a company, the compliance with local COVID-19 health requirements, and in what concerns reporting to holding companies, this reporting has become more frequent and more demanding. That's what we have observed in all of our clients. And now I would like to ask Aleix, how did it look like for you during COVID and right now?
Yes, thank you, Livio. The pleasure is mine to be here. Thank you for the invitation. How is about to manage this COVID situation, this super VUCA environment? Because to be honest, something like this we never faced it before. So the first measures that we applied as a group was, as Livio was mentioning, to increase our communication. So the reporting was really increasing a lot. So we just did 2 video conferences per week. In order to follow the major impacts of this COVID in 4 different areas. So how was impacting in the country, how was the COVID impacting also in the plan, which measures were applied. I mean, also how the new laws that were really very bumpy, I would say, were impacting also the company. Of course, the COVID impacts in the market and in the operations, how it was impacting to our daily business, and as mentioned, one of the most important things, of course, was the liquidity. Very, very key part of this month's liquidity was. So we did very strict measures on following the receivables for having a healthy company. So
subsequent events, thank you. Subsequent events of COVID, we will address 2 issues: the recovery speed and the second wave of the virus. We have looked at what is expected the recovery looks like with the CLI indicators. The strong second wave of the virus. It is in the press that we are already in the second wave in Spain. We understand that the economic costs will be lower than those of the initial strict lockdown, since economic agents, authorities, the society is better prepared to cope with this second wave. Aleix, from the practical side of managing a production plant in Spain, perhaps you can add some comments concerning this second wave.
Yeah, we are all aware that we are restarting the schools. So it means a lot of the risk is increasing. Also, the temperatures will be higher in the next weeks. So we are expecting somehow to have some positive case in the company in the coming weeks. And based on this, and for minimizing impact, we have increased or be more strict protocols, and just having bubble teams in the company just to have a connection maximum 2-3 people, in order that because we had a very impacting experience of having to close the company for 2 weeks. So this is something that we want to avoid. And of course, that was a very interesting lesson learned. More important even, constant communication with the people to make them feel safer and confident to come to work, because this is something that it's key for the success. We want to skip, of course, just any problem with the health of the workers.
Thank you. Trends and opportunities. A brief identification of trends we have in our client portfolio and in the market. Continuous innovation. The new normal requires continuous innovation. This means not only in what concerns COVID, detecting the disease, reducing cases, limiting mortality, but also trends like IT-driven communication. Aleix was just mentioning that communication between human resources is very important. Also, trends that are efficiency related and have to deal with sales, production, supply chain processes that are being redesigned on a digital way. And finally, also human resources management, a very important trend and point in this new normal context. Opportunities for players in the market for new investments. Well, there are liquidity constraints in some industries. It was mentioned in the beginning, the tourism industry might be obliged to perform distressed sales, and generically low capitalized local companies might also be in the situation of these distressed sales. In what concerns the COVID-19 driven sector, this means industries that are performing well and that could provide a good profitability for new investments or existing players in the market that want to invest. The health and the pharmaceutical industries, and in our office we have advised some M&A transactions that were related with renewable energies and environment. From the local perspectives, I know, Aleix, that innovation is very important for Isovolta.
Yeah, definitely. The confinement make us to look at our internal side of the company a lot more, to have internal perspective for especially processes, improvement of processes and efficiencies, which we had space for improving. And the most important part, changes in our management skills and communication for adapting to this new reality. This is again, I will repeat a lot, but this is the most important part in all companies, I guess. But as our own experience, that was key for having the not losing the track.
Very good, thank you. what is behind the figures, what this means, what are the strategies that are implicit to the economic agents' actions that we are referring previously. And Andreas Schmidt mentioned the resilient value chains that are very important. We observe that we have to mention that some of the strategies that we can identify is that companies are organizing business for speed to sustain the pace. Digital speed is very important, operating faster, for reviewing strategies and immediately allocating resources to these strategies. There is an appetite for automation. Companies are ready to reinvent, and the decisions are more and more data-driven. There are market concentration trends. One major acquisition, for example, in Spain, is the one from the bank La Caixa, who is acquiring Bankia. And a final comment is that that companies are placing an emphasis on the comprehensive focus on the customer more and more. So a brief conclusion, this great reset, COVID-driven, opens the way to a recovery that will be mainly digitally driven. And Aleix, I know, again, innovation for Isovolta and also future strategies based on digital.
Yep, continuously improving and adapting processes, as mentioned before, it's one of our targets, of course, investing in new technology. This is what we are dedicating a lot of efforts in automation. Target is now we have to use the time for becoming more and more competitive, and we cannot lose the track of the market. This is clear. Digitalization, this is something that we are really working strongly on that, and even more important, to get new talent on board, and even more important than this is to keep it, and offering a long-term projects to them, and yeah, the opportunity for becoming more competitive, for getting new markets. So this is something that we are really pushing for this. Really.
Understood. Thank you. The first point of our presentation is finished. Thank you very much, Aleix, for your comments. And I would like to give the floor to my colleague, Clara Del Valle, from our labor department. She will address the changes in the labor law in Spain in the last months. Thank you very much.
Well, thank you very much, Lidio and Aleix, for your clear and detailed explanations, and welcome everyone. In this section, we would like to introduce you the labor changes that have taken place after the COVID-19 in Spain, as the pandemic situation involved changes in many sectors of the economy that consequently affected directly to the working and employment fields. Yeah. Well, after being declared the emergency state in Spain, with activity halt of the commercial sectors, hotel business, tourism industry, and so on, the government qualified the COVID situation as a force majeure cause in order to allow the companies to suspend the employment contracts and to let the companies to adhere to the economic benefits from the government. Originally, the force majeure cause was focused for natural disasters like earthquakes or fires that badly damaged some companies as a contributing plan for the company's reconstruction. But the Spanish law do not foresee or not regulate a specific procedure for a statewide force majeure situation. And consequently, it was created the temporary employment regulation plan as an extraordinary measure in order to address this pandemic situation. This procedure came into force on March, and it was planned until the end of the emergency state, but its duration was prorogued until September 3rd of this year. But now the big question, what are going to do the companies that are not prepared to restart their business activities? So
as a point
Yeah.
here. So we did have Isovolta had a positive case in March, an infected case. So we applied to this force majeure, let's say a layoff. And so we had to close partially our operations for 2 weeks, which was something quite impacting, of course. But our learning is that if we wouldn't have done this, I mean, the people was starting even to get in panic. Okay, and it's even worse. Okay, and the good thing is that after the 2 weeks layoff, when we come back to work, I mean, the moods and the confidence of the people and consciousness of the people was very high. So it was a good decision at the end. Sorry, what's
Yes. So, well, in this case, for those companies that at the 3rd of September are not prepared to restart their business companies, the Spanish labor law contemplates a specific procedure for those companies affected for objective reasons, and that is for economic, technical, organizational, or production causes. This kind of procedure allows the company to also apply for an employment contract suspension or working time reduction based on objective reasons, with the big difference that the procedure duration will not be linked to the COVID, but it will be as length as the company wishes. So having this said, let's see the...
Yeah, we also had the experience of doing this short time work in Isovolta, and it was the key for balancing our cost structure with the economic impact from the market. So it was a very interesting tool to get on. So for balancing, as mentioned, our cost.
Yeah, it's a good measure to take into account. Yeah. Okay, so having said this, let's see the global employment line during the health crisis. In general, there were more than 3 million employees affected in Spain by a short-time work measure. And we can see that the most impacted occupational fields, as you can see in the graph, were the hotel business and food services, construction services, cultural amenities, and educational sector. But it needs also to be said that in July of this year, 1.5 million of employees were incorporated in their proficient occupations. So it seems that progressively the situation could return to the normality. Here we can see the unemployment rates over the past months, where it is appreciated that the highest peak of the unemployment was in March, and progressively slowly down to a normal level and rising up again a little bit in August. But the increase on unemployment values this month, that is traditionally a bad month for deployment, is the lowest in the last 4 years, according to the official data published by the Employment Ministry. Let's talk now about the additional super measures published by the government. Not only was published the temporary employment regulations procedure, but also additional measures were related by the government to support the employment. These measures are the remote work, the flexible working hours, the part-time working, and the working time reduction. The Spanish labor law do not regulate the distance work, neither the flexible working hours. So now, during these days, this week, the government is working on a new regulation in order to provide these measures. There are already some points published over this draft bill, and we know that the remote work system will be of application with a prior agreement with the employer, and for those employees that are going to work in remote for more than the 30% of the working hours. So it seems that the remote work system has come to stay, and this is why the authorities are working on a permanent regulation of this measure. And Lej, I don't know if you want to introduce us your professional experience over the remote work and these measures.
Definitely, this is the new reality that we have nowadays. I mean, we need to balance this personal and professional life. We have so many limitations. So the challenge, internal challenges that we are facing now is to change the mindset to a project and process management oriented one, which means to have clear milestones and targets to fulfill in order to be able to control also the people performance. This is something that we have to learn from Austrians, because they have very well developed all this project management mindset. So we are really working on that, of course, together with our partners, and we think that it will be successful, definitely in the coming months.
Yeah, definitely. In this graph, we can see that the telework system is the most implemented system to address the health crisis for both sectors, the industry and the services sector, followed by the suspension on hiring and the reduction on investment. So the most implemented measure was not the short-time work system. As we saw in previous graphs, Spain had almost 3.5 million employees affected by this measure, but we have to take into account that Spain has approximately 20 million employees registered. So that's a good point of view. And now, regarding to the legal framework, would like to say that to regulate the pandemic situation, the government published 13 royal decrees, law, 6 decrees, more than 100 ministerial orders, and many more rules. The existence of so many legal changes do not allow an adequate interpretation of the results and consequences of the objective pursued by the new rules, and that's the reason why there are judicial disputes regarding the interpretation of the dismissals classification, talking about the labor matter, because the rule is not too clear over the nullity or the unfairness of the dismissals after a short time work measure affected of these employees. Well, the regulations forbid the dismissals of the employees affected by short-time work for 6 months after its extinction date, but this kind of dismissals are not yet judicially classified, so we are still pending to get this matter solved and get a firm resolution of this question. But nonetheless, yeah, just to finalize our section, in spite of the prompt legal changes and challenging times left, we can state that the business sector will emerge strength from the crisis, ready to benefit from the new wave of growth when it comes. After this transitional period, we will have the necessary resources and skills to meet current and future challenges, and we will be prepared to prevent or reduce the risks for future setbacks. And I don't know, Aleix, if you want to add something about your legal experience.
Just maybe, yeah, I'm not an expert on that, but we had just to point out 2 experiences during the last months. The first one was when we had to declare the company as essential one for being a part of a value chain of an essential company. Mm-hmm. And there was not even a framework to go for that. So it was, each company was really trying to solve it as we can, just to show how uncertain was the situation at that time. And also we had to send a lot of documentation to our people for letting them come to work, because it was a lot of limitations also for the mobility, and it was quite intense period. So we've been talking about with Clara, and that was really a master for us in laws, even for the non-expert ones. So just to point out, of course, now we are a lot more prepared for whatever is coming. Because,
for sure. Yeah, thank you, Leish. And after this brief labor changes introduction, I would like to give the floor to Andrea Bouvet, who's going to talk about the tax perspective after COVID. Thank you.
Thank you very much, Clara. Hello, everyone. Effectively, yes, now we're going to talk about tax perspectives. Probably one of the first messages, especially after Clara and Alicia's comments, is that Spain, unfortunately, is not as business-friendly as we would all like, in the sense that there are still, as you can see, some legal uncertainties that obviously affect the labor measures, but also the tax measures, which we're going to discuss now. However, obviously, Spain is taking the right steps to try and improve the Stimmung and Ambiente, the regulations, to try and be more business-friendly. And obviously, local advisors will try and always assist foreign investment, Austrian investment into Spain to try to navigate through the local regulations. We are not, in this section, we do not want to focus with what happened in the past, what specific COVID-19 tax measures were taken. In this section, what we really want to discuss is looking forward, knowing that the main concern of Austrian groups in Spain or that are already investing in Spain or that are willing to invest in Spain is probably a lack of liquidity, cash constraint situation. In this section, we want to discuss what available tax measures exist that can actually improve this lack of cash or this cash flow situation. And these are just some of them. Obviously, there are more specific ones. For instance, and these are measures that can be taken immediately or in the following weeks or months. With the first one, we start discussing with the import VAT deferral. This is also applicable in other European countries, and this obviously affects companies that import goods into Spain. And under this regime, which is a voluntary regime, a company has to apply for this regime. Basically, what the tax authorities let you do is to not pay VAT in the import. So this allows a company to save that financial cost of having to anticipate that VAT, that import VAT, and recovering after several months. Under this special regime, the companies can directly not pay VAT in the import. A second measure has to do with the monthly VAT return. Under general conditions, businesses with a turnover up to 6 million euros per year in Spain must file their tax returns on a quarterly basis every 3 months. However, and this means that they can obtain the VAT refund at the end of the year. When they file their fourth quarter in January of the next year, that's when they can obtain the VAT refund. However, there is a special regime. Again, this can be applied immediately that allows the companies to obtain VAT refund after each month. At the end of this small section, Alish will obviously comment on the different particularities of these different regimes. R&D tax credits, also available in most OECD countries. Very, very interesting for companies that might be developing with engineers, scientists here in Spain, some activity, because this means that they can benefit from very, very interesting tax deductions. These tax deductions, R&D and innovation technology, varies on the type of activity that the company is doing, but this can be a deduction of 25%, 42% for R&D, or 12% for technology. There even is a stronger advantage under this regime, which means that you can monetize the tax credit. So if a company is strongly investing in R&D, in the very wide sense of R&D, let's not imagine white lab employees, but also in software development. If the company is investing very strongly and it does not generate a big enough profit because maybe it's in the growing investment years, there's a very interesting monetization option where the company can obtain a direct refund of up to 80% of that deduction. The next measure has to do with the corporate income tax installments. Basically, for your information, so you know that in Spain there are two ways to calculate the corporate income tax installments for companies in Spain that have a turnover under 6 million euros. The standard alternative is that you have to pay the advance payments based on the previous financial year. So if in 2019 we had a profit, this means that in 2020, with the corporate income tax installments, companies have to be paying advance payments, even though in their 2020 they're having losses or probably their activity has diminished. There is a possibility that companies can change this way of calculating the corporate income tax installments and calculate it with the current P&L, which is also a very interesting cash saving measure. Fifth, obviously, group taxation consolidation. If the Austrian group in Spain has more than one company, a company in the permanent establishment, or a consolidated group of entities, this is also very interesting because you can offset the benefits of the profits of one of the companies with the losses of the other. So we don't have to pay taxes for one and wait for the other. This is very, very tax efficient measure. Compensation schemes. By this, we mean how to motivate your employees, how to try and increase the salary, the compensation that they receive without the company really having to give out any more income, any more expenses. Typical ways to use the compensation regimes, obviously fringe benefits. Try to use the specific fringe benefits that are applicable in Spain. Then we have a 30% reduction for bonuses that have been generating during more than 2 years. So a long-term bonus, also very interesting. And also obviously employees that are tax resident in Spain, but that carry out their activities, some part of their duties outside of Spain, there is a very, very interesting exemption for those works carried out abroad. To finalize, obviously transfer pricing among international groups is very, very important, not only for the documentation obligation in Spain. This is an obligation that kicks up when the group has a total turnover of 45 million euros. This is for the documentation. In any case, as you are probably very aware of, any group transactions between the Spanish subsidiary, the Spanish permanent establishment, and the main office in Austria and other group entities must be set under the arm's length principle. This means under a market price with that related party. To finalize, financing structures, this is probably not strictly tax, but obviously when we are in a situation, in a stage where the activity of the Spanish company might be decreasing and maybe the company is lacking funds and there might be what we call in Spanish net equity disequilibrium, probably one of the most common alternatives is to use a participatory loan, because this loan, this is a third-party loan from the head office, does count as net equity of the company, and this would take the Spanish company out of a dissolution situation. And now I pass the word to Alish, if you're kind enough to please comment on some of these measures.
Yeah, thank you, Andrea. Basically, the measures that we are using, which are really impacting positively in our results, are the deferral of the importations that we are doing, which are quite a lot, important percentage that we have. So what we are doing is just postponing 1 month. In our case, we are postponing 1 month the payment of this VAT. So with all what this means. Regarding the monthly VAT return, we had to do 3 years ago, or 3 or 4, I'm not remembering now, an update or just to install a software in our ERP, okay, which is called sich, the sich software, which needs to be renewed or updated every year with the proper investment. And this software is allowing us to have the VAT return every month instead of once a year, as Andrea mentioned. So this is really having a direct impact in our net debt in a very positive way. Another thing that as mentioned before, we are doing innovation, we are doing investments in technology, automation, and so on. All these things are really tax credited in Spain. We are, of course, pushing in this direction. Also, energy investments are quite subventioned in Spain. So we are fighting for this kind of improvements in our plant in Barcelona, and using all these tools that the government is offering as much as possible.
Thank you, Aleix. Effectively, what he was discussing with the monthly VAT return is that once you enter into this obligation, and this also triggers after the 6 million euro turnover in Spain, is that compliance obligations increase, and the real-time reporting kicks in. This means that companies must upload their issued and received invoices directly on the tax authority's online platform. After discussing these immediate tax measures to improve the company's liquidity situation, we are going to discuss from a very, very broad point of view for those businesses and groups that are thinking of investing in Spain. What we would like to discuss is the key ideas when considering investing in Spain. First of all, the corporate structure. Spain, as in Austria, also has the distinction between a GmbH and an AG. In Spain, the SL, which would be the limited liability, GmbH, is a minimum capital of 3,000 euros, whereas the Aktiengesellschaft is 60,000 euros. Other alternatives as corporate structures would be to incorporate a branch or a permanent establishment. We say that it is not applicable in the sense that you do not have to pay a capital when in creating a branch or a permanent establishment. Very important also when we discuss with foreign investors that want to do business in Spain has to do with the directors of these Spanish entities. Number one, it is important to know that the directors do not need to be Spanish citizens or Spanish residents. The directors can perfectly be located and tax resident in Austria. This is not a problem at all. Probably the important thing to consider is, number one, the liability of the directors. A director of a Spanish company has personal liability. This means that he is personally liable for any wrongdoing within the company, which is understandable and very similar in other EU jurisdictions. However, what we always recommend, and this is pretty interesting as well, is to obtain an insurance, a civil insurance that covers any risks that might appear. The last comment with directors, and this has to do strictly with a tax matter, very important, very, very important, because some companies, some investors overlook this, has to do with the compensation of the directors. It is very important. In Spain, you have the possibility of not compensating, not giving any income to the directors. It can be a free charge, a free duty. However, if the director is going to receive any compensation, this should be included, the compensation system should be included in the company bylaws, in the Satzung of the company, because if not, the tax authorities could consider that compensation is not deductible. Second point, Social Security, very, very highlight overview. Number one is so we're going to discuss about the costs. The cost of the employer is 30% of the gross salary. However, there is a top, it's limited at approximately 50,000 euros per year. This means that the employer's cost of an employee in Spain, regardless of the salary of the employee, is gonna be topped at 15%. It can obviously be lower. 15% is the maximum. Sorry, 50,000 euros. Apologies. The employee must pay on his own the 6%. And just so you know, in case of severance payments, layoffs, a Spanish entity must pay a compensation to the employee that is equal to 33 days per work year with a maximum of 24 months. This was changed in 2012. Previously, until 2012, it was 45 days per work year with a maximum of 42 months. And to finalize with taxes, very quick overview. The corporate income tax in Spain is currently 25%. In the past, it was 30. It went down to 28. It's currently 25. Personal income tax. the top marginal rate is approximately 48%. However, as probably some of you are familiar with, Spain does have a very interesting tax regime for workers from other jurisdictions that come to work in Spain. For instance, if an Austrian group decided to create a company in Spain and wanted to relocate one of their employees from Austria to Spain, that Austrian employee, instead of being taxed at a 48%, could be taxed at a flat rate of 24%. It's what they call in the tax jargon, the Beckham regime. VAT, the top rate is 21%, and obviously Spain, because part of the EU, also applies EU directives as the parent interest royalty directives. So dividends, interest, and royalties among group entities are tax-free. Obviously, as an OECD member, Spain has also applied automatic exchange of financial information, country-by-country reporting, and Spain has a very, very interesting participation exemption. And because of its treaty network with Latin America, Spain is also a very, very interesting platform to invest in Latin American countries. And with that, we close the tax and investment section, and we go towards the key takeaways of our today's presentation. First one, obviously, is a positive summary, is that COVID will not last forever. It's going to be a V-shape, so soon we could be expecting a recovery. We have to be working and operating under the new normal, be it from a financial point of view, labor, or tax point of view. The long-term trends, the long-term economic trends are still in place, so we expect a certain amount of growth. Spain has also applied a similar Kurzarbeit regulation similar to Austria. Spain does have very interesting cash saving measures from a tax point of view, and that can be implemented in the short term. And obviously, whenever there's a small crisis, Spain and Austria can obviously find retroactively interesting investment and opportunities, be it because there's distressed companies or because there are synergies that might be interesting for Austrian businesses in Spain. And the key hopeful and the joint statement is that obviously the future of the Austrian and Spanish relationships among companies and businesses depends fully on us. That was all for the comments. Now we're going to go into the Q&A section, and I'm going to pass the word to Rafael. Thank you all very much.
Yeah, thank you, Andrea and Aleix. Thank you, Elidio and Clara, for your really interesting input. I would like to ask all of the speakers to put on your cameras and microphones now. Okay, there we are. Well, we ran a little short of time. Nevertheless, I would like to pass some questions we received during this webinar, and I would like to ask with you, Aleix. There was a very practical question, a little bit about business culture in Spain. So you were talking about some measures taken by your company and the difficulties and how you resolved it. Actually, was it easy to agree on that with your employees, or was there a lot of resistance, or how did you feel about that? And how did you manage that problem?
Yeah, thank you for the question. That was one of the key parts for the success. So in fact, we also have a union, of course, in our company, and they were really understanding the situation very well. So, and the negotiations that we have with them were, I would say, quite fluent and easy to reach an agreement. To be honest, we had a great union, to say it in a good way. So the people is really understanding the situation and, of course, adapting to the reality. So that was the key. Of course, we know companies that hasn't been that easy, but in this context that we had, so it was very good, I have to say.
Okay, thank you. There was another question, maybe for Ilidio and Andreu, regarding M&A, mergers and acquisitions in Spain. Do you currently already see an increase in that activity? And if yes, in which sectors? So maybe we'll pass it to Ilidio first.
Yes, I can start. Not an increase. Well, what we can say is that there is not a drop in this in M&As and intentions to buy. Our clients that are interested and in acquiring businesses in Spain are perhaps waiting, but the interest is there, and we are advising some transactions. Yes.
Okay. Thank you for that. And the last question just dropped in for Clara. It is a very practical question. We know that the minimum wage in Spain was raised last year. Is this a discussion right now to do it again for next year? What is the political situation right now?
The critical situation of what? Sorry, I did not.
About raising the minimum wage. Since it was raised last year, I understand the question that there's people are fearing that it's going to be maybe raised next year again.
Over the minimum wages.
Exactly.
Yeah. We do not really know what is going to happen over that, because now this week we are discussing. The government is discussing over another prorogue for the short time work system. So here there is a point that we have to take into account, because the government do not have maybe much money to invest for these measures and the benefits, and they are discussing to prorogue the ERTES application, but with benefits cuts. So we are still pending to know if it's going to be a reality, an increase for the wages and salaries for the next year, because it's a really delicate situation, and it's really difficult to confirm this point.
Rafael, I would probably add, when you read on the news, lifting the minimum wage is not a major discussion right now. They did discuss, obviously, all the consequences that have to do with extending the Kurzarbeit and what will happen with the general layoffs. And just for an example, to show foreign investors what the current concerns in Spain are, and obviously of the current government. There was a lot of discussion of trying to raise taxes, and this was a measure that would go against trying to incentivize the economy. And the Spanish and it was most of tax professionals were actually discounting that this would happen. And at the last moment, because of the EU pressure with EU funds that Spain was going to obtain, the Spanish government had to delay and eliminate this increase in taxes. So we would think that any increase of the minimum wage that would not be in line with generating businesses would be out of discussion for the short and midterm.
Okay, so we can calm a little bit the Austrian companies on that issue. Perfect. At that point, we really passed the time. So I would really say thank you to all of you, to our speakers, also to the attendees. Please, before you close the window now, there will pop up 2 short questions to leave us a quick feedback. It's really, really quick. So with that being said, thank you very much for this session, Alicia and Andreu. Thank you, Ilidio and Clara, for your time and for being with us during this webinar. It was really a pleasure having you with us. Thank you all, and stay healthy.